Thank you for tuning into our Buyer Series videos. This video is going to be on a very important topic, and that is choosing insurance. And so I've brought today Adam Miller, the owner of Insure Texas, to talk to us a little bit about obtaining insurance when you're purchasing a home. So Adam, thank you for coming in. And if you will, just tell our viewers just a quick synopsis of years in the business and kind of your experience.
I've been in the insurance business for a little over 8 years. I'm second generation as far as my family being in insurance. And it's just something I'm passionate about. One of the main reasons I got into it is when I bought my first home, there was really nobody giving me good advice on what I needed and what coverages I needed. And I kind of just guessed myself. And I really don't like the idea of buying insurance to insure my most valuable asset through an 800 number. It should be done with somebody who I can actually talk to and can put eyes on my property. Good job, good job.
Well, you know, that actually kind of segues into a very important thing. You know, a lot of times my clients will call me and say, you know, Paul, I'm confused. You know, I'm shopping for insurance. I've gone with maybe my auto insurance company, and they're telling me I need one thing, and my lender is telling me something else, and I really don't know what protects me best. So what are kind of like the minimum requirements that you would advise a client on their homeowner's insurance of what to get?
What I tell every client is the most important thing is making sure you're actually insuring the home itself. A lot of people think, oh, I've gone out and bought this beautiful home in Westview or Bel Air and it cost me $1 million, and so, oh my God, I got to buy $1 million worth of insurance. What I explain to clients is land is not insurable. You have to extract that value, and what we do is we use the same software that every company uses, even y'all in the real estate industry use, to do the evaluation of what the reconstruction cost of the home is. And that's all you need to insure the home for. We know that you love this lot you bought on or that you're building on, and it's a great location, but the lot's not going anywhere. If God forbid the house blew away or it burnt down, the lot's still there and it's still worth the same value, if not even more. So we try to work with the client to educate them on what would it cost to actually rebuild their home if it had to be built by itself. We had the same problem out in the suburbs where mass builders will build a lot of homes at one time, use the same contractors at discounted prices. Then sometimes we have to go the other direction with clients where they may buy a home from a tract home builder for $300,000, but to have it built as a one-off by itself might cost $450,000. So it's our job to educate the client on both directions, and neither one is usually the greatest conversation at first, but we actually try to show the clients the numbers and make sure they really understand our goal is to minimize their premium and minimize their deductible. That's our goal.
Right. And I guess it would vary greatly depending on their risk level they like to take. Maybe some people like to have a very high deductible for low rates and vice versa. Do you see that a lot in the
Absolutely. We try to educate our clients that where and would they really file a claim? If we get somebody calling in saying, oh, I just want the bare minimum $1,000 deductibles, we're like, are you really ever going to file a claim? Have you ever owned a home before? Have you ever filed a claim in the past? Why would you basically want to do what's called self-insuring? When you're taking such a low deductible, you're basically saying that you're going to want to file a claim for anything, when in fact you're going to lose a huge claims-free discount. I educate my clients to really consider, is filing a small claim that will get them a few $100s over their deductible in return worth losing a discount that's probably worth a lot more to them every year for the next 5 years? So I try to work with the client and explain that education value to them.
Good point. When it comes to different types of policies, I know we have HOA, HOB. What are the difference between those, and what would you advise a potential client on which one to select?
Personally, I'm a strong advocate for an HOB, and the reason I like the HOB is it's a broad form policy, which means it covers a lot more of the things. Most people, when they're shopping insurance or they're buying their first home, go, oh, well, it covers fire, theft, vandalism. Great, I'm covered. Those are the things they're thinking about, are the major things that need to be covered. The #1 claim filed in Texas, both for largest amount every year paid out, and the most frequently filed claim is internal water damage. That is covered on HOB, and most times it's even limited on HOB. You have to upgrade it by buying what's called an endorsement to expand the coverage. And those are things we try to educate clients on. The chances of you having a house fire is a fluke. You even rarely see it in the news these days. Hurricane, everyone's going to be covered. So where's your biggest liability? It's going to be an internal water damage, whether it's your kid or grandkid sticking something in the toilet, they thought it was funny and see if it would float, and it stuck. And I've had that happen. We had a $75,000 claim last year from somebody who stuck something in the toilet. It overflowed on the second floor. By the time they realized the problem, there was probably 40 gallons of water floating through the house.
Wow.
Yeah, it only took them 9 weeks being out of their home too, which they had to be put up in a hotel while the spouse was pregnant in the third trimester.
Wow.
Not exactly a great experience, but at least we paid all of the claim.
Did we get a number on the months that this kid was grounded after that?
It was a very young child. I think that it was just guilt, if anything.
Okay.
Long-term guilt, forever.
Okay. Well, speaking of water, that actually segues into a very good question. We hear a lot about it on the news, trying to keep politics aside. Talk to me about flood insurance. Who needs it? How is it determined? And what's going on with these rates and it, expiring and being renewed? It just seems like a constant mess that we're trying to figure out.
To be honest, as an insurance expert, it's a constant mess for me as well. I try to explain to clients that, again, not being political, but our current administration saw a financial problem that we were having with FEMA. FEMA is broke. FEMA has been broke for a long time, and it is because it's paying out more money than it's taking in. And it's because only the people that have to have flood insurance were getting it, and the government had been subsidizing the pure FEMA premium for so long that there's just no more money to suck out of it. And so in about 2010, the government said, hey, we got to fix this problem. And by 2012, which is pretty good for our government as a whole at the federal level, to realize they created what's called the Biggert-Waters Act, Flood Insurance Act of 2012. And it had 2 years for it to actually take effect. So right now, at the beginning of 2014, people have forgotten what happened in 2012, and now all of a sudden it's taking effect. And what it's doing, it's saying that if you have a commercial property, sorry, we have to bring you to full premium immediately. And a lot of my commercial clients, especially in the flood areas like Meyerland and Bel Air and Heights, are getting hit with dramatic rate increases immediately because they're commercial property.
Right.
On the residential side, it has up to 4 years to grow, or 4 to 5 years, depending on where your location is, to go up in 20 to 25% increments to bring you to what they call full rate.
Okay.
There is no traditional grandfathering anymore. It doesn't matter in what situation you bought your flood insurance. If you were part of what they called the grandfathering from the Allison revisions in 2007 or 8 that allowed you to not have to get a flood certificate because you weren't considered in a flood zone before Allison in 2001, that went away. So our traditional idea of grandfathering is not exactly what the federal government looks at the traditional definition of grandfathering.
Wow. So who would you, and I've found with my clients, it's kind of a double-edged sword because the people that don't really need it have very, very inexpensive policies. And then I just had a client the other day in Meyerland that they're paying something crazy like $4,800 a year for flood insurance. So obviously the people that have to have it have to get it. When do you advise people to get it? Maybe they're not in the floodplain, but we saw during Tropical Storm Allison, places that had never flooded before in Houston were under 10 feet of water. So what would you advise clients on when they should buy it if they don't have to?
If you own property or rent property that's on the ground floor of any building in the greater Houston area, which we call the Swamp Bowl, I say get flood insurance. And the FEMA changed, I want to say 2008 or 9, they stopped saying that there was any property that's not in a flood zone. It's the preferred risk zone. So they're saying that everything has a chance of flooding. It's just a much more minimal chance. And that's where consumers have to understand that by law, if you're in the preferred risk zone, you don't have to have flood insurance by lender law, but you should still have it. I've told everyone to have it. I lived in Sugar Land for many years in a levee-controlled area that it had probably less than a 1% chance of ever flooding. I never missed a flood payment. You never know when it's going to happen, and most often than not, flooding in the inner city away from the coastal exposure comes from drainage issues, not from rising water. It comes from somebody's trash can getting blown over from a hard wind and blocking the street drain, and all of a sudden water rises. I had a client who they had built a silencer protection wall blocking it from Memorial Drive. They didn't make the gaps big enough and dirt had piled up by the holes. His house that was in a zero flood zone risk exposure got 2 feet of water in his house, and he lost 2 cars.
Wow, so I guess you never really know when a flood could happen.
I say if you own or lease property and you care about the things that touch the ground, insure them.
That's very good advice. Well, another type of insurance that a lot of people, especially maybe in the Houston proper area, don't know about, but as a former resident of Pearland, I know very, very well, is windstorm. So explain to us, what is windstorm? What does it cover, and if you have a claim, how do you determine what windstorm covers, and how do you determine what your regular insurance covers?
Sure. Windstorm is, much like FEMA, we have TWIA here, which is the Texas Windstorm Insurance Association. And what they do is they provide insurance when primary private carriers like Nationwide or Allstate or any of the major brands that we're all familiar with, in counties that touch the coast don't want to provide wind coverage. And pretty much it's all of them. I
Right.
can't think honestly off the top of my head of a single private carrier willing to provide wind coverage in any county around the whole entire United States that touches open water. And that's what the definition of Tier 1 is. Much like Pearland, they were in a Tier 1 county. What it does is it allows you to buy insurance through a state-funded program that's state-insured that allows you to get the same rate no matter where you go. Much like FEMA rates, doesn't matter where you buy them from. You can try to go online, you can call every insurance agent in the whole state. You're at the same rate for both TWIA and flood insurance because it's state rated, it's federally rated.
Right.
And that provides you wind-driven rain if the endorsement's on there. It provides you just traditional wind damage, hail damage, any damage to your home that was being not covered by your primary residence related to windstorm.
Okay. And what, because a lot of times when my clients see that windstorm policy, they go, great, here's another 800 or 12 or whatever the number is on top of my insurance payment.
Sure.
Does it do anything to your regular homeowner's insurance? Does it lower that since they're taking some of the risk off of their back?
Oh, absolutely. It usually reduces your primary private insurance that you have for your fire, theft, vandalism, and internal water damage by 60 to 75%. So when you bundle the two back together, you're probably still paying the fair market as you would if you were in Tier 2 or Tier 3 like in Montgomery County. The difference is no matter what, your rate's going to be higher because you're closer to the coast.
Right.
So either way, it's not like you can compare a house north of I-10 to a house in Friendswood and expect the rates to be exactly the same for the same home. Much like a house in Houston compared to a house in Austin are not going to be the exact same rate, even though they can be identical homes. It's all a risk factor.
Okay. What are your suggestions? We've talked about these different types of policies. What is your suggestion for homeowners as far as shopping for a policy? I mean, I've had everything happen with my clients, from someone that picked a very well known national company that said, sorry, we just don't insure in that area. Right. I've had people that have called the 1-800 number, and I asked them, okay, well, what's your coverage? And they can't even answer. So what advice, other than calling Adam, what advice would you give buyers or just any homeowner in general on selecting an insurance policy?
Well, you already gave away my secret of calling me. That's the
Right.
number one thing
Right.
to do. But honestly, I try to explain to clients that this is your most valuable asset in most cases. I know there's plenty of people out there that have a lot more money in the bank, but 99.9% of homeowners, their home is their most valuable asset. And they need to take a minute and really think about what they're doing and say, okay, auto insurance has become so commoditized by the call in 7 minutes and save more money, or call in 15 minutes and save 15% spiel. That doesn't work on homeowner, especially in a coastal market. And you really need to look at what are the underlying coverages. You can call 10 companies and then they can all say, yes, we're insuring your home for $200,000. Yes, you have a 2% deductible or a 1% deductible, and our rate is X. That doesn't talk about the 20 other things that are underneath the policy. Is there water damage coverage? Is there foundation coverage? Is there water backup coverage? There's so many underlying things, and one of the things we try to do for our clients is we say, send us the other quote you got. We're glad that you're doing the smart thing as a savvy business shopper and looking at your opportunities out there, but let us show you what the difference is. Don't just look at top line's $200,000 in coverage, bottom line is X premium. There's a huge page of data in between. It's usually double or triple line data across. You need to look at that. It's like buying a car. You can't look at every Toyota Camry in town and say they're all the exact same thing, even though they're Toyota Camrys.
Right.
There's all different levels, there's all different features. You really need to know what the nuts and bolts of your coverage are. One of the big things in the coastal exposure to me is our loss of use coverage. A lot of companies, to cut their costs to make their premium look more attractive, give you minimal loss of use. Well, if God forbid we had a natural disaster like Ike in 2008 again, what happens when tons of people are out of their homes for months because there's a shortage of labor and materials to rebuild all these homes damaged? And now you're out of your home 5 to 6 months between city permitting, finding labor, getting contracts in place, picking what you want to get done, and your coverage is only 20%, which is the standard.
Wow.
You need to be looking at all of the risk factors. You don't buy insurance just to please your lender. You buy insurance to protect you from the worst case scenario what ifs.
That's a very good point. That's a very good point. So someone comes to you and they have their homeowner's insurance. Does it make sense? A lot of times insurance agents will call around to kind of get a bundled discount. How does that work?
With our agency, we strive to do that every time because to me, at the end of the day, even though I'm in insurance for a living, it's one of the last things I want to think about. I link insurance right around paying my taxes. And I think that most people do as well. And I think that's the biggest challenge with a home buyer is that they're thinking about property taxes and insurance at about the same level. They're thinking about the furniture they're buying for their home and all the other things are much more important to them until you call them 2 weeks before closing and go, okay guys, the inspection's done. Have you got your insurance in place? And at that point, that's when you want to sit there and work with them and make sure they know what they're getting in coverage and make sure they're getting their insurance in place.
Right, that's really good advice. You know, a couple of months ago, I had a home that was on Clear Lake and had sustained, well, let's just call it significant damage from Ike. A boat had actually been launched from a harbor up and kind of crashed in the side of their home.
Wow.
And one of the things they wanted was the CLUE report. And we heard that a lot kind of back in the days when mold was a big issue. And it still comes up. So can you talk a little bit about what is a CLUE report? And you know, what we were kind of surprised is that we couldn't just have an insurance agent, that they had to pull it. So tell us a little bit about it, what a CLUE report does and what kind of information it provides.
CLUE report is our internal report that basically every insurance carrier uses, and it goes through a system. There's several different vendors out there that do it for insurance carriers, but basically it's all shared data. You know, people like to accidentally forget things happen to their home, or they forget about a fender bender they had in their car, or they forget about a ticket they got. Sometimes it's completely by accident, sometimes it's done intentionally. And it's basically a back-end report that we can use that can show any claim that insurance carriers paid on a house or a vehicle in the past 5 to 10 years, depending on the vendor that we use and depending on the carrier and how good they are in giving data. I've had issues where it's happened to where I've unfortunately had a realtor have to renege on a deal on a home where a seller did not disclose a claim that had just happened 18 months earlier. And I'm like, come on, you remembered that.
Selective memory, right?
Exactly. And this client of mine was buying the home and asked me to run the quote for them. And I asked them, as we ask every client, do you know if this house has had any claims since you're buying it? They had a seller's disclosure from the original seller that owned the house the whole 3 years that had been unbuilt. And they're like, nope, no claims, no nothing. They didn't realize that we were going to catch that. And it was a pretty significant internal water damage claim. And it was enough to scare the buyers, saying, if they're not telling us this, what else are they not telling us?
Absolutely.
And so the clients ended up picking a second home option because they were afraid that the sellers weren't completely forthcoming.
Wow, yeah, good thing they had a knowledgeable insurance person pull that. You know, one of the things I also hear is occasionally we'll hear stories of the home's had a claim, so we can't get insurance. Do you ever find that? Is there something that's so catastrophic that's happened to a home that it's just not insurable?
The only time I've seen an instance where either the insured or the property itself could not find additional insurance or replacement insurance when they were purchasing the home is if it was repeat internal water damage or repeat theft.
Okay.
Because that basically says, why couldn't you fix the problem?
Right.
It's one thing if the claim happens once, but if it's happening over and over again, especially in an older home, like for instance in Meyerland, if you have an older 58, 60-something-year-old home, which is the average for those mid-century moderns in that area, and they keep having a water damage claim every 3 to 5 years inside the house, why don't you replace the plumbing?
Right.
Like part of why I purchased my home is the plumbing had been completely redone.
Right.
So I didn't have to have that worry.
Right, okay. Well, I want to thank you for coming in.
I
and
appreciate
I want to
it.
thank
Thank
all
you.
of our viewers. We'll have Adam's contact information at the bottom of the video, so call him with any insurance questions, and thanks again for tuning in.